Hi, I'm Keon, a senior research analyst with Thomson Reuters Lipper, and I'm here to speak to you about the fund flow activity for the week ended Wednesday, February 22nd. Let's start by taking a quick look at the week's market activity. Both the Dow Jones and Industrial Average and the S&P 500 index were up on the week. The Dow was up roughly 0.8%, while the S&P 500 about 0.6%. This marked the third straight weekly increase for both indices. This week's gains can be tied, most of this week's gains can be tied to the investor enthusiasm over President Trump's announcement that he'll soon be making public his pro-economic expansion policies, specifically the tax cuts he's proposed, as well as the financial deregulation. Okay, let's turn our attention back now to this week's fund flows activity. We'll start by taking a look at the activity for this week's fund macro groups. Equity mutual funds had net outflows of $176 million. Taxable bond funds took in roughly $2.2 billion in net new money. Muni bond funds had net inflows of $186 million, while money market funds took in roughly $4 billion in net new money. Let's take a closer look at our equity funds groups now. We'll start by taking a look at the mutual funds. The $176 million in net outflows, once again, mostly due to domestic equity funds. Domestic equity funds saw net outflows of about $475 million last week, bringing their year-to-date net outflow to about $4.5 billion. This follows the trend that we've seen in 2015 and 2016, during which time domestic equity funds had significant net outflows. 2016, they had net outflows of roughly $225 billion, and in 2015, they saw about $160 billion leave their coffers. On the other hand, non-domestic equity funds are experiencing a good year so far. They took in roughly $300 million in net new money last week, pushing their year-to-date net inflows to about $4.4 billion. It's kind of a bounce-back year for them, as they saw net outflows of roughly $28 billion in 2016. Okay, let's move on now to our equity ETF group. This group had net inflows of $2.9 billion last week. It was their ninth straight weekly increase. For the year-to-date, they're up $16.5 billion. The largest increases last week belonged to the PowerShares QQQ product, which had net inflows of $763 million, and the iShares Core S&P 500 product, which took in roughly $584 million in net new money. The largest outflow, as we can see, belonged to the SPDR S&P 500, which saw roughly $1.56 billion leave their coffers. Let's move on to our next groups now, which is the taxable bond fund groups. We'll start by taking a look at the mutual funds. Taxable bond mutual funds, also on a bit of a streak here, had $2.2 billion in net inflows last week. Their eighth straight week of consecutive inflows. For the year-to-date, they've taken in $24.4 billion in net new money. This is by far the largest net inflow for the fund macro groups. The year-to-date numbers are being driven by only five of the peer groups. Core bond funds have had net inflows of $7.1 billion for the year-to-date. Loan participation funds have taken in $5.4 billion in net new money. International income funds have had net inflows of $3.5 billion. Multi-sector income funds, net inflows of just over $3 billion. And the last group with significant net inflows are inflation-protected bond funds, which have taken in $2.1 billion so far in 2017. Moving on now, we'll take a look at our taxable bond ETF group. Also a good time period for them as well. $1.8 billion in net inflows last week, their fifth straight weekly inflow, and they're up $18.2 billion for the year-to-date. The largest inflows last week, just about the same at $412 million, give or take, for each. The iShares iBox High Yield Corporate product and the iShares iBox Investment Grade product. The largest outflow for the week belonged to the SPDR Bloomberg Barclays High Yield Bond product, which saw just around $314 million leave their coffers. Let's move on to our next group now, which is the Municipal Bond Fund group. A good streak for them as well. 7 straight weeks of net inflows for the group. Last week, they took in $186 million net new money. Once again, as we've seen during this inflow streak, it's being driven by the high-yield muni debt category. Last week, they took in $255 million in net new money, accounting for all of the net inflows overall for the muni bond fund group. Our last group to take a look at is money market funds. Money market funds, pretty high net inflows last week, roughly $4 billion. Once again, the overall net inflow was marked by volatility within the different peer groups that fall under the money market fund category. The largest net inflow on the week belongs to the institutional U.S. Treasury Money Market Fund, which took in $4.5 billion in net new money. And the largest outflow belonged to the institutional U.S. government money market funds, which saw $2.1 billion leave. That's it for this week's report. If you'd like to take a closer look at the data yourselves, please join us at our website, which is www.lipperusfundflows.com.